The dollar hits a one-month high on strong U.S. jobs data, and Citigroup favors European equities over U.S. You're watching The Daily Brief with Forbes. I'm Ramia Faraj. The dollar held near an almost one-month high today after U.S. economic data highlighted a still tight labor market that could keep the Federal Reserve on its aggressive rate hike path. The number of Americans filing new claims for jobless benefits dropped to a three-month low last week, while layoffs fell 43% in December. Private employment rose by 235,000 jobs last month, far exceeding expectations for a 150,000 increase. Analysts say strong labor market data means the Fed can keep hiking interest rates. Citigroup analysts turned underweight on U.S. equities on recession fears, but are bullish on European stocks, saying much of the pessimism was already priced in. The U.S. bank upgraded its view on continental European equities to overweight. Citigroup expects earnings per share for stocks in the MSCI All-Country World Index to contract by 5 to 10% over the year. For 2023, the bank favors defensive sectors like healthcare and cheaper cyclicals, including energy and financials, over more expensive technology and consumer discretionary names. Eurozone annual inflation fell for a second month in a row to 9.2% in December from 10.1% in November. It's the first drop into single digits since September. Consumer prices had reached a record 10.6% in October. It was boosted by a slowdown in the rate of energy price rises. World food prices eased in December, marking the 9th consecutive monthly fall, but they gained more than 14% in 2022 compared to the year previous. The UN FAO says this is the highest since records began. The FAO says the decline in December was driven by a steep drop in the international price of vegetable oils, together with some declines in cereal and meat prices. But this was mitigated by slight increases in the price of sugar and dairy. German industrial orders fell sharply in November to hit their lowest level in more than 2 years. New orders, which provide a foretaste of industrial output, sank 5.3% compared to the previous month, to the weakest level since July 2020. The economy ministry says the steep drop in orders came mainly from an 8.1% decline in demand from abroad, including a 10.3% decrease from within the EU. The plunge continues a downward trend seen since the Ukraine war last February. Earnings from Shell's LNG trading operations are likely to have been significantly higher in Q4, despite a sharp output drop owing to plant outages. Europe's largest oil and gas company update ahead of its full-year result reveals it expects to pay about $2 billion in additional 2022 taxes related to windfall taxes imposed on the energy sector. But Shell, the world's top LNG trader, says its LNG trading results are set to be significantly higher than in the previous quarter. Let's take a look now at today's Forbes Real-Time Billionaires ranking. It tracks the daily ups and downs of the world's richest people. And our biggest winner today is Chinese battery mogul Robin Zhang, up $2.7 billion with net wealth of $34.7 billion. Our second biggest winner today is e-commerce mogul Colin Zhang Huang, up $1.5 billion with net wealth of $33.6 billion. And our third place winner is Mexican telco billionaire Carlos Slim Helú, up $1.4 billion with net wealth of $84.5 billion. Check out our website and our social media for all of the latest Billionaires news. German pharmaceutical company BioNTech will trial a cancer treatment in Britain using the same mRNA technology used in its trailblazing Pfizer-BioNTech COVID vaccine. Scientists believe mRNA vaccines could be a game changer against many diseases. They provoke an immune response by delivering genetic molecules containing the code for key parts of a pathogen into human cells. I'm Ramia Faraj. This is The Daily Brief. Thanks for watching. Have a great weekend.